Hello, everyone. Welcome to Wall Street from Main Street podcast. My name is Mo, and today's guest is a returning guest, Fabian Calvo. He's the founder of Fabian4Liberty. Fabian, thank you for joining me again.
Hey, Mo, it's great to kick off the new year with you. Thanks for having me on.
Great. So I want to talk today about the Federal Reserve. Now, they were in the news today. They talked about their thoughts on what's going on in the stock market and the economy, and they hinted, they didn't say it directly, but they hinted that that perhaps they made a policy error when they did the hike in the rate, even though it's only a small one, 25 basis points. Do you believe they reverse course and cut it back down?
Well, it's an interesting question, though. I've actually been talking about it on my YouTube videos over the last couple of days, really the last week. First, I'll just say, like you said, we're talking about a quarter of a point in interest rate, in the rise in rates. Keep in mind that most banks, that doesn't even roll out for a couple of months. So it doesn't really necessarily hit immediately. Mortgage rates were still very low. So what does that tell us? That tells us that the economy is clearly unhealthy. It tells us that the only thing that's kept this market propped up and pretty much every asset class propped up has been manipulation by the Federal Reserve and central banks. So, look, it doesn't surprise me one bit. In fact, just I think on Monday, I posted a video talking central banks fear economic collapse. And I think that we could very well see not only a reverse course on just the going back to 0%, but Janet Yellen's already stated negative interest rates are in the toolbox. Certainly, quantitative easing number 4 is a potential this year, and I think that look, we're in a new normal with respect to this current economy, with respect to the end of this current business cycle, and that new normal is where we see these gyrations. I'll use the stock market as an indicator because most people, that's where they look, is we've seen this wild volatility in the stock market, and we're going to continue to see that. I don't think, Mo, that we're going to see a collapse of asset prices till the end of the year. I think there's a lot of political ramifications involved in this as well. And so, yeah, I think the Fed will reverse course. Is it an error? Well, it's not really an error. In fact, what they should be doing is raising rates and warning the American people about the crash ahead so that people can prepare accordingly and we could rebuild the economy on real growth factors. But unfortunately, that's not going to happen.
Yeah, if you look at the 25 basis point rate hike, it's just a blimp on their chart for what they've done in the past 30 years. Like, if you go back to the 70s when they really raised the rate, I mean, they took it all the way up to 15%, I believe.
Actually, it went up to the low 20%, and we went in around a year. In about 12 to 14 months, it went from around 6-7% to over 20%. And even, we could talk about that, or we can look at even a more recent example of another central bank, the Central Bank of Russia, that increased rates by 10 plus basis points. And what happened, Mo? Well, their economy didn't collapse. So when we talk about like economies out there that have strength, I find it interesting that you see the Russian economy be able to persevere in light of a pretty massive rate hike, but the Fed and the U.S. economy with just a quarter of a point, we begin to see the dam, for lack of a better word, is starting to break.
And yeah, that just shows you how fragile our economy is right now when they only raised the basis point by 25 points. And yeah, we're having a whole lot of volatility in the stock market, and the economy's not doing well. The retail numbers, you look at every number out there, it's like awful right now.
Yeah, unemployment rate just surged, and a lot of that has to do from the layoff of seasonal employees in December. Housing actually came out pretty well. The numbers that came out on housing for December looked pretty strong, despite weather conditions that I know for a fact. I mean, they often will blame weather on any negative economic indicator, but with housing, it actually does affect housing in the Northeast and other areas as well. But look, overall, we have an economy that has been manipulated since 2008, even before that. But any glimpse of a recovery is pretty much happened by the expansion of credit, and that can only work so long. And so now we're in this predicament, or I should say the Fed is in this predicament, where they need to unwind this. They know their own numbers Bo, clearly demonstrate that if they keep 0% interest rates for an extended period of time, you're talking at minimum a third in the loss of the purchasing power of the US dollar. So they know this. This is not a mystery. This is not a conspiracy. But it's interesting that they are in a situation where they cannot unwind everything that they've done over the last 7, 8 years, because it's going to end in a real crash, and it's going to end in, like I've always said, the end of this current business cycle. For the listeners out there, it's not the end of the world. It's just the end of this business cycle, and things will rebuild, and things will, there'll be boom and busts for the rest of our lives. But this one certainly is going to be a very large one.
And ever since the Federal Reserve was created in 1913, I believe the U.S. dollar has lost 99% of the value. So when you talk about if they keep interest rate at zero for an extended period of time, they lose a third of that. That's like almost the bottom of the barrel right there.
Yeah, no doubt. And look, anybody who has gone to the grocery store over the last, they've done grocery shopping the last 10 years, you see gas prices, you see a number of things where energy prices, college tuition, healthcare prices, all these things are going up. And it's because of the loss. It's not because prices are going up. It's because the purchasing power of the dollar is going down. And it's going down because of the policies of the Federal Reserve. And, I mentioned a little bit earlier, Mo, a lot of this has political ramifications. Like, I think that the big banks on Wall Street, the global elites, really that believe in the concept of global governance, I think they're all in the bag for someone like Hillary Clinton, and I think that they know that if the market collapses prior to November 2nd, she will certainly not have a chance of winning the election, and so they're going to keep things propped up because that's who they want in power. They want to continue the Bush-Obama policies that have led to banks since 2007, 2008 grow by up towards of 50%. The big banks are 50% larger after the crash. They have trillions and trillions of dollars in so-called assets. Small banks are going out of business daily. And look, these are the types of policies that they want.
Yeah, it doesn't matter what candidate they get. I mean, it seems like all the candidates except maybe Rand Paul, it's just status quo. Just want to keep the establishment strong and keep everything the way it is, like we have now with Obama and what we had with Bush.
Yeah, it's an interesting point, Mo, because I remember in 2010, I believe it was, when Ted Cruz was first elected. I remember I was in Hawaii. I did a video on the beach about this. His wife works for Goldman Sachs. He's gotten loans from Goldman Sachs. Certainly, he's cozy with Goldman Sachs. And I find it interesting how dogmatic people get in who they believe. Like, I mean, it's like every 4 years, people genuinely believe, whether it's Donald Trump, Ted Cruz, Bernie Sanders, they really think these people are going to make a difference. As much as I disagree with Bernie Sanders and in many aspects of Donald Trump, many of their campaigns aren't financed by Wall Street. And for me, that's a plus, considering the political landscape overall.
Well, Bernie Sanders, a lot of his money is coming in from union. So, I mean, Wall Street, union, to me, they're kind of the same thing.
Well, certainly the unions, the unions have lost a lot of power. I personally don't think you could compare the overall power of a union to someone like Goldman Sachs or a Citigroup. You look at Hillary Clinton's top 5 donors; they're all the big mega banks. That's just a reality of the political of the political environment today in America and really around the world.
Yeah, I agree with you. I mean, Donald Trump and Bernie Sanders did not take any money for the big bank or corporation, but yet, is that enough for people, libertarians like me or you, to support them?
Mo, that's a fascinating question, man, and a great point. I find it really troubling to hear people that are avowed libertarians supporting someone like Donald Trump, a guy who has called for a single-payer healthcare system like Canada. He's called for a $6 trillion tax increase in the past. His stance on guns in the Second Amendment is shady at best. And so he's come around with all of these new policies in the last year that are positions he did not fundamentally hold in the past. Now, I believe that people can change their minds, and if they have like a pivot point in their life or a story that I've heard his story. For example, I happen to be pro-life, and just real quick, I'll say I've heard his story. He used to be pro-choice, now he's pro-life. I heard his story on that conversion. So people have these conversions, but I just find it amazing that people that will talk about, real fundamental Austrian economics, they believe in the Constitution and the Bill of Rights, can get behind someone like Donald Trump. I think it shows you in many ways how shallow people's overall understanding is of not just economics, but just of the principles of the founding of this country.
Yeah, and Donald Trump, I don't think he had any understanding of how economic work, because he wants to raise taxes on China imports. He wants want Mexico to pay to build a wall on the border. He wants to raise taxes. I mean, he's no different than what Hillary Clinton and Bernie Sanders want. So I don't see why people continue to sow support behind him, even though he calls everybody in Congress stupid, which is great. But his policies are not what we need. But
no, and it's funny though, because on Donald Trump is that just because people will say, well, no, he's a successful business guy, so he has to have an understanding of how the economy works. And in many cases, when it comes to things like NAFTA and CAFTA and these other trade agreements that he claims that he's against, I agree with that. But just because someone runs a successful business, by no means does that make them equipped to understand how real free market economics works. There's a lot of successful business people out there, whether it's the guy who created Facebook or someone like George Soros, who has, in my opinion, made his money with borderline criminal activity. But you can't deny they've had a modicum of success in business. Doesn't make them understand the way real economies work and the way they grow, and understanding the principles of free market economics.
Yeah, I can't agree with you more. So let's switch gears here and talk about the stock market and what's going on there. And now, obviously, there's a lot of volatility lately in the stock market. Last week or past couple of weeks has been bad time for the stock market. That has been going down and down, and lately we found a bounce back up. And now today it's down again. Dow Jones was down about 250 points at one point today. And a lot of people are blaming, the turmoil in China and the oil market for what's going on. Is that fair, or should the blame be pointed out to maybe the Federal Reserve or the weak economy in the U.S. rather than what's going on in China in the oil market?
Well, I think that it's just a collection of all these different issues. Look, investors like to have some kind of stability, and we're in a very unstable world, whether it's the Chinese economy clearly having fractures. In my opinion, as I've said for years now, they're going to enter the same thing that the U.S. did in the 1930s, a Great Depression-style event's going to happen in China. They're trying to stop it with more manipulation in currency and credit expansion. It's clearly not working. Or whether it's what's happening in the Middle East with the tensions between Iran and Saudi Arabia, the price of oil, which is, the thing with oil is that there's a glut of oil in the market. With all of these new oil companies that went online, the market's been flooded. But, you're a single war or a regional war away in the Middle East, away from seeing oil back over $100 very easily. So, but all of these things are just a collection. Certainly the Federal Reserve is at the heart of the economic problems in every asset class we have. But there's a lot of geopolitical uncertainty in the world today, and that's leading investors to be panicked. Now, with these huge stock market gyrations that we're seeing, people need to remember the majority of stock trading is high-frequency trading, and the people that are doing that are the big banks. And so I think a lot of it has to do with the vested interest in them and their ability to profiteer from these quick up and downs that we're seeing in the market.
And that's a great point. And now we have a global economy, so there's a lot of factors that go into how the stock market behaves nowadays. Because we do a lot of trading with China now, so once China economy goes down, our stock market is going to get affected. And oil market also connected to the stock market. So whenever we see changes happening in that market, it's going to affect the stock market as well.
No doubt.
Okay, great. So now you're also a real estate expert, aside from doing the podcasts and YouTube videos talking about the economy and what's going on in the stock market and politics. So I want to get your thoughts on the real estate market. Now, as you mentioned before, real estate has been kind of strong lately with new home sales spiking to 8-year high, while home prices is falling to 7-month low. So I want to get your forecast on the 2016, and also, is there any correlation between the new home sales spike and the fact that the home prices has fallen?
Well, I mean, look, I think that housing overall is likely going to see this year a modest appreciation. I think that you have, again, for me, I'm a real estate guy, so I see opportunity in the stock market, whether it's going up, down, or sideways. And I think many people that are experts or so-called experts, I really don't like that term, but in any asset class, they make money regardless of what's happening. The point here is that with real estate, we have the reason we've had this rebound in prices, and we'll continue to see these rebound in prices, more so in some bigger metro markets than in others, is because of, again, the credit expansion and FHA and these loans that are being made easier for people to obtain financing that ordinarily would not qualify for a loan. So real estate, like any asset class currently, is going to go down in flames. It's going to see, I mean, look, there's still trillions of dollars in non-performing debt and new debt all combined together that's at risk. And that's not going to go away, Mo, until there is an end of this business cycle. And what I mean by that is really almost like a debt jubilee, where a lot of this debt is going to have to be dealt with because it cannot be paid back.
It sounds like what we had before the 2008 financial crisis, where just a lot of debt was not being repaid in the real estate market, especially the subprime loan market.
Well, yeah, I mean, look, subprime loans were about $1 trillion. Credit-worthy loans were a little bit over $1 trillion, and you had major defaults in the credit-worthy borrowers as well. So, just because someone has good credit, they lose their job, they can't make their mortgage payment. I think that's the kind of situation we'll be seeing.
Yeah, and I see especially a lot of my friends in their late 20s, buying home, nice big home, 4 or 5 bedrooms. I'm just wondering how they could afford such a thing, especially in my area. I live in Northern Virginia, and real estate here is very expensive.
Well, Mo, I will say, Mo, that in light of everything we're talking about, yeah. I personally still believe we're in, regardless of what happens with the economy in these different bubbles, we're still in what I call the golden age of business because of the internet. So there's still an abundance of opportunity out there. That abundance of opportunity is just completely shifted. Let me give you a small but perfect example of how the world is changing. I upload videos on YouTube. Well, yesterday or last week, I was talking with the guy who helps me with my marketing, and he turned me on to this affiliated company with Twitter called Periscope. And basically, you can post videos, podcasts, whatever you want, and you could broadcast them live to an audience. 10 years ago, that wasn't possible. So today, you can have Wall Street for Main Street broadcasting live to millions of people like you're on network TV. So the rules of this economy are being rewritten so quickly that people that are stuck in what I call the job paradigm are the ones that are going to go down in flames. They're the ones that are going to be hurt the most. Unfortunately, that's a big portion of the population that have, they're not hip to these changes, and unfortunately, we have a government that does a major disservice by trying to tell them that they're going to somehow, the jobs that have been shipped over to China, that somehow those jobs are going to come back, and they're not.
Again, and a lot of the technology industry has really gone forward in the past decade, despite the slowdown in the economy. We're pretty soon we're going to see a car that can drive by itself. We're seeing a lot of technological advances in healthcare and other areas as well. So, I mean, the one bright spot in the economy right now is technology.
Yeah, absolutely. I mean, look, technology, I think, is already fundamentally changing, not just economics, but clearly the labor market as well. I read something not too long ago. They're saying that by 2020, and this number keeps being revised down, by 2020, robots and automation could take away as much as 25% of jobs in America. That's a major problem for the average person out there that is stuck in a dead-end job. But the beauty of it, in a way, is that there's still time to figure out what you're going to do. And there's alternatives to not just being stuck in that. And, hopefully, people recognize that, because there's certainly, look, there's not going to be like an alarm bell that's going to go off and is going to tell you this. You got to kind of figure it out for yourself.
Yeah, and there's a robot out there that's gonna replace the bartenders, the waiters, the people that flip the burgers. So those people out there might want to think about their next career within the next few years.
No doubt, Mo.
So I wanted to talk about also regarding the real estate market. How much of the impact is the government housing subsidy program is having on the real estate market? Because I get in the mail catalog from the government that say that they're going to subsidize my next home purchase, and my home purchase is going to be lower than my rent, and etc. Just want to get your thoughts on that.
Yeah, well, I think clearly that's the direction they're going. I remember about 2 years ago, I was talking about how the millennial generation is the largest segment of the population, largest generation in America today. A lot of them are entering that stage of being able to buy a home, but they're saddled with student debt. They don't have the down payment. So government looks at those people as an opportunity to be able to create what's called the wealth effect, where they basically give out loans to these individuals. They go buy a home, they think that they're rich, and they go and they spend money on a bunch of other things as well that go along with that home purchase. That hasn't really rolled out to the extent that I thought it would by now, although it is starting to. I think prior to an economic collapse, we're going to see those loans given out even in more of an abundance. So there's still, although I disagree with these policies 100%, there's still these kind of tools in the arsenal of the central planners to try to keep this market inflated.
And that's an interesting insight there. So I want to broaden your outlook and get your outlook on the economy and the stock market, and what you think is going to happen in 2016.
Well, I think 2016, early 2017. I think anywhere in that time frame, we're going to see the likelihood of central bank collusion on global stimulus plans, on regional stimulus plans, or countrywide stimulus plans. I certainly believe are in the cards. I don't believe we'll see an economic collapse prior to the elections, likely beginning of 2017. But I think even before that, we will see massive government stimulus, massive government spending, all kinds of things that the Federal Reserve will try. Because in this last bubble, in this last business cycle, when the end of the business cycle happens, the boom gets much larger, even though it's artificially created, and the bust gets much larger. So in my opinion, based on history and looking at history, everyone talks about how big this bust is going to be. What they don't talk about is that almost always there's a major boom prior to that bust. And we've seen that inflated boom in things like stocks. And so I think that's why I still think the Dow will likely hit 20,000 prior to the next crash. I think housing prices will continue to be modestly go up, but I think demand for new houses will continue because of credit expansion. And I think we'll continue to see this. It's almost like this slow grindward down where more and more people are realizing they've been lied to about the economy, but at the same time, you're coupling that with just insanity monetarily and economically from central planners. Now, I get this question all the time. Well, why would they want to do this? Well, they want to do this because in this big crash, that's where they stand to make the most money. So they want the crash to be as big as possible, and they want the boom to be as big as possible. And I don't think we've reached that artificial boom that they're expecting just yet.
Yeah, if you remember the last crash in 2008, that happened right at the last year of the Bush presidency, and on to the 2008 election, and on to the first year of Obama's first year as president. So we're around that time where, we could get another crash or major correction in the economy if you look at that time cycle, because it seems to happen around that time in 2008.
Yeah, and you could go back and you could look at these actually, how these have gotten bigger and bigger. I mean, you look at the .com bubble that happened, and then you see George Bush come in, the Fed starts lowering rates after 9/11, and then it starts this whole new bubble. That all crashes when Barack Obama is elected. Then they pump it up again. But you can even go back further. I mean, look, under the first George W. Bush, the economy was a disaster. Clinton comes in, the economy starts to get better. So we see these like mini boom and bust cycles that get bigger and bigger as general elections play themselves out, particularly general elections for the White House.
And that's a great point. And yeah, I think we're due for a very significant correction in the economy as well, and in the stock market as well, because the stock market has been going up ever since 2009 and had no major corrections. So something has to give in the stock market eventually.
I totally agree, Mo.
All right, Fabian. Well, it was great having you on. If people want to find out more about your work, where can they go?
Well, they can go to Fabian4Liberty.com, and there's I post all my videos there. And for my real estate educational stuff, it's resourcefulrealestateacademy.com. I do a free webinar every Wednesday at 4 p.m. And they can also find me on Periscope too at Fabian4Liberty. I broadcast live videos there Monday, Wednesdays, and Fridays at 11 a.m. Pacific time.
Okay, great. Well, thank you for coming on.
I appreciate it, Bo. Thanks for having me.